Hi guys, Campbell here from the Property Factory with a quick video update regarding the recent changes that the government have put on property investors. We've had a lot of inquiry, a lot of questions, some people sitting on their hands, some people misinformed. So hopefully I can explain really clearly in a short, sharp way these recent changes. So the government have made two changes to the rules around property investing. The ability to deduct the interest costs from your rental has now stopped. That's for people getting into property now. For people that are already in property, there's a 4-year period where it reduces. But what that means is that you can't deduct the interest anymore. And in real world English, what that means is that your cash flow is going to get worse from that change. But more on that in a second. So that's the first change the government have made, and that is the inability to deduct the cost of your interest against the property's revenue or income. The second change, which we don't think is that bad at all because we're a long-term, low-risk investing business, is if you sell a property within 5 years, up until now, that was the period that you pay tax on any gains. So if you sold it in year 6, you wouldn't pay any tax on any gain. Now, that's just been changed to 10 years. So if you buy a rental property and sell it in 3, 5, 7 or 9 years, you'll pay tax on any gains. If you sell it after 10 years, you won't pay any tax on those gains. Now, we believe in long-term investing, so from our point of view, that hasn't actually changed much. And if you buy a property and sell it in 5 years and have to pay tax on any gains, you're still making a profit. You're just paying tax on it like any other trading business. So two changes: the interest on the interest deductibility is the main change that's occurred. But the silver lining in all of these this recent news is that new build houses, townhouses or apartments are exempt. And what that means is that you can still deduct the interest from the mortgage on a new build house, new build townhouse or a new build apartment, and your bright line test is going to be exempt, but we haven't seen the finer detail of that. And what we're thinking that's going to mean is that you will still be able to sell a property within 10 years with some rules around that on any capital gains. Government's doing this for a very good reason. They're doing it because they want more housing stock brought into the market, and they want investors to sell their houses to owner-occupiers and replace them with new ones. They're not saying investing is a bad thing. They want investors to buy new property. And as an agency that specialises in new builds, we've just been really hit with good, strong demand this week for properties around the country. We can also help you get rid of your older properties. We can also help you do an assessment whether or not you should sell it or renovate it. Because a lot of people have properties that actually aren't that old, and they probably don't need to be sold. They could be renovated, and whilst the interest may not be deductible anymore, it still might make sense to hold on to it. So we've got experts within our team that can help you make those decisions. But the bigger picture here is you can still buy brand new properties and claim the interest on the mortgage, and you can still buy brand new properties and you'll be exempt from these new bright line changes. Whether that's 5 years, we don't know yet. We're waiting for the finance minister to come out with the detail behind it, but they have isolated new builds as a product, which is why if you're looking at buying a second-hand investment right now, it's probably not the smartest thing to do. Talk to one of our team and we'll help you look at new builds. We've believed for probably 4 years that new builds make more sense than second-hand property. 10-year warranties, latest engineering, latest compliance around heat, around insulation, moisture. We believe in new builds. So talk to one of our team. They'll fill you in with a bit more detail. Read the information on this webpage, and we look forward to helping you into your first or second or third